Through a bill, the finance minister has sought to change rules and regulations with respect to investment in startups. What are these changes? There is a change that has been made with respect to angel tax. Now, new firms such as startups will need to pay angel tax if they raise money through foreign investment. Before this, only domestic investment used to be considered for angel tax. There is going to be an impact with respect to investment in the startups, which is already tumbling under pressure. Now, from the perspective of GS mains paper, third, it is important to understand the concept of angel tax, what is the origin of it, what are the implications and everything. Let us move ahead without any further delay and look at these many topics that we are going to go through step by step. Of course, what is angel tax is important. Other than that, who is an angel investor will also be discussed. What is the origin of angel tax? It was introduced in 2012 in order to make those pay who circumvent the logical and legal process of paying taxes, and of course who want to park their black money in startups or a shell company. They are saying it to be a startup. Other than that, how the calculation takes place, what exactly is the proposed change, any opposition, the impact of it, status of startups in India, initiatives and challenges related to it. Let us move ahead and talk about the news piece. Why a proposed change in angel tax has rattled Indian startups. Now, this angel tax has been proposed through a bill. We will talk about that as well. Who is an angel investor? An angel investor is any affluent individual, that means a rich individual, super rich individual, who provides capital for a business startup. Supposedly, I have immense amount of money and there is a startup that needs money or capital to, go through their business, and I invest in it, then I am the angel investor. They usually do it in exchange for convertible debt or ownership equity. Of course, if I will see my future in that company, my financial future in that company, it is going to give me profits. Of course, I am going to have an equity or a convertible debt in it. Okay. Now, what is an angel tax? What happens is when investment is raised from the domestic sources, it was earlier counted as angel tax, but now for foreign investment, it is going to be there. There is a problem. Now, according to it, angel tax refers to the income tax payable on the capital raised by unlisted companies like the startup via the issue of shares through off-market transactions. Generally, it could be done through raising the prices of the share. Angel tax is levied on the capital raised via the issue of shares by unlisted company from an Indian investor. Now, of course, from foreign investors as well. If the share price, now there is a condition that if the share price of the issued share is seen in excess of the fair market value of the company. Fair market value of any share is the actual price you pay for purchasing that share. Once you purchase the share, you get equity in it, right? Now, if supposedly a share costs 10 rupees a piece, but now I am, issuing these shares at 20 rupees. What happens? The difference of 10 rupees will be taxable as, income from other sources under the new bill. Okay. Now, the excess realization is considered as income and therefore taxed accordingly, that I told you. Generally, what used to happen earlier, it was seen that many investors, domestic investors, they used startups or unlisted companies to receive angel investment as black money and convert them into white money. And that caused a problem because that money was not taxed and the government was losing on its revenue. So in 2012's budget, it was proposed that angel tax should be levied, and this is an anti-money laundering provision, you can say. If we talk about the legal origin of it, from where we can cite the angel tax, Section 56, Clause 2, Subclause 7B of the Income Tax Act of 1961. This is colloquially known as angel tax only. Now, the Finance Act of 2012 introduced the section of the IT Act, and it taxes any investment which is received by unlisted Indian company which is valued above the fair market value by treating it as income. So you couldn't any longer say that, oh, this partner is my angel investor, this person is my angel investor, so they are giving me much more as the price of the share if we compare to them to the normal people who are purchasing that share. So it was kind of done for that only. And the investment in excess of the fair value is characterized as income from other sources. Like I gave you the example of fair price being 10 rupees per share, and I'm giving it to the other investors at 20 rupees. Okay, the tax is imposed as angel tax since it largely affects angel investors investing in startups. I'm a person, and I'm an affluent person. Of course, I'm an affluent person who has garnered a lot of black money, but I want to show it as white money. Now, what do? I become an angel investor. Two things I will achieve. First, of course, the prominence of being an angel investor. This person is so good. This person is investing in my company or in that company so much. So first that. Secondly, my black money is turning into white money. Other than that, on that black money, I'm also going to earn profit, because what will happen, as I am purchasing the share at a higher value than the other people, then of course I will be given much more in return. So that is the cause. Moving ahead, now angel tax will be applicable when any closely held company issue shares to domestic investors at a price higher than its fair market value. Generally, that only happens. People who are very close to the owner of that startup do that. Okay, so that is why it's a very close-knit company. And how do we calculate fair market value? Fair market value is to be determined only through book value. Book value is the value of any company's assets minus the liabilities, we can say that. And it is generally used for calculating the fair market value. Okay, it is to be determined by only through book value or discounted cash flow method, failing which an assessing officer will intervene for assessment. Discounted cash flow method means that you are calculating the value of any company with respect to the future cash flows. So if there is a problem with that, an intervening officer will come into the picture. Okay, now exemptions used to be given. Exemptions are given. Whatever money you raise will be exempt till total share capital plus the share premium. It touches INR 25 crore. This is a prelims fact. This means that the total amount of capital issued should be below, well below INR 25 crore. And this means an exempt startup will not have to pay any angel tax for up to 25 crore of the capital raised. And this could be in multiple tranches. A startup can raise 10 crore, then 5 crore, and then 6 crore, and all of it would be free from angel tax. Okay. Moving ahead, now if we talk about the inclusion, in order to calculate the above mentioned INR of 25 crore, the amount of money which is received from the following will not be included. Now, these are the certain categories. Any money coming from outside India is exempt. This is an erstwhile information. Now, before the bill was introduced, NRIs were also out of the picture as exemptions. Okay, remember that, but now they wouldn't be. Prohibition. In order to check that the company has received investment is not a shell company. Shell company is a company which is posing itself to be a genuine company, but it is actually a company that is laundering money. Okay, the startup cannot invest in any of the following assets. What are the assets they cannot invest in? Building, land, loans, shares and securities, vehicle or other modes of transport, jewelry, bullion, art like drawings, paintings and sculpture, and even archaeological collections. So you get this prelims fact correct. The current bill which I'm talking about over here is the Finance Bill of 2023. It wants to amend Section 56, Clause 2, Subclause 7B of the IT Act 1961. Now the provision says that whatever money raised will be counted as income for the startup, and it will be subjected to income tax under the sources, under the heading income from other sources for the relevant year. However, with the latest amendment, the government has proposed to also include foreign investor in the ambit. Earlier, it was only domestic investor. Okay, now foreign investors are also going to be there. Now, the problem is that the funding has already dropped before this, you can say, the introduction of this bill. Funding for India startup, it dropped by 33% to $24 billion in 2022. Foreign investors are a key source of funding for startups. Why? Because domestic investment is not flourishing for them. Other than that, several foreign investors such as Tiger Global, a very prolific foreign investor in Indian startups, has invested in over a third of the startups that have turned into unicorns with a valuation of at least $1 billion. And it will impact the employment opportunity, the skill upgradation, the interconnectedness of the market, and everything else. Moving ahead now, if India wants to become digital, it has to think all through this. Impacts could be, this could compel more startups to flip overseas, and that will impact the employment opportunities in India. The reintroduction is completely counterintuitive to the entire of reverse flipping. Now, that is what India doesn't want right now. India doesn't want that it has to, it could move its employment outside India. It wants more employment in India, more employment opportunities, more flourishing ease of doing business opportunities in India for startups. But for that, we need funding. And if we do not have robust domestic funding, we have to rely on foreign investment. But national security is also important. So from that perspective, it has been done. Now in 2021, Indian startups raised $23 billion across 1,000 plus deals. 33 startups became unicorn. So far as of 2022, India has added 13 more startups to the unicorn club. India ranks third after that of the United States and China when it comes to startups. There are many initiatives that were introduced by the government to propel startups. First is the Startup India Seed Fund scheme. This provides funding once these owners have proved their concept, developed prototypes, test products, and entered the market, much like Shark Tank only. National Startup Awards, it recognizes and rewards outstanding startups. Other than that, the Prarambh scheme is also there. This summit aims to provide a platform to startups and young minds from around the world to come up with new ideas, innovation, so that this culture of thinking of out of the box is introduced into India. National Initiative for Developing and Harnessing Innovation. It wants to double the number of incubators and startups in the duration of 5 years. So all these initiatives have been given, but there are certain challenges. First of all, there is a lack of forward thrust to innovation. The education system in India does not promote vocal training, and that is a problem. Other than that, the higher education is completely bereft of any sort of, this initiative of thinking out of the box. So that is also a problem. Other than that, there is a lack of recognition. There are so many small village industries. If they could get recognition, they could become, prosperous, and their outreach could increase when it comes to imports, exports, everything. But because of lack of recognition, they fall behind. Bootstrap nature. What is bootstrapping? If you do not get proper investment for your startup, you started saving from your own income. And that is very common in India because domestic investment is not very prolific. Other than that, there is scalability concern, the production possibility, because most of these startups are concentrated in big regions. The smaller regions, they do not have the opportunity to improve their status when it comes to startups. So that's all for today. I hope you understood this topic. Now I will attach a question in the comment segment. You have to answer it. I will take the names of those who have answered that question. Thank you so much for watching.